Hi friends, my name is Suraj. I welcome you all to a new and exciting video today. It's going to be about the fundamental analysis of DMart company. If you're liking the content, do like, share and subscribe to the channel. It will motivate us to make further more videos for you all. So as you all know, today is going to be about our own favorite Kirana Dukan story. तो चलिए start करते हैं. In today's video, we are going to primarily cover about the DMart story first. Second, the facts which make DMart very special. The third is going to be about the fundamentals and the financials of the DMart. Fourth is going to be about the peer comparison of DMart and its peers. And fifth is going to be about how the future may look like for this sector and DMart and my personal take on this share. First is about the DMart story. The founder of DMart, Radhakishan Damani, was born into a middle class family in Mumbai where he went and studied BCom. Apparently, he dropped out of BCom, post which he was running a small ball bearing business. And unfortunately, his dad expired during that time, and he had to then join his brother into a stockbroking business, which his father had started back then. And they started trading momentum stocks to make a little bit money there, as he saw that Harshad Mehta was inflating the shares at that time, and he knew and realized that there was no value of those shares that high. Radhakishan started short selling those shares, and post when Harshad Mehta's scam got exposed in 1992, Radhakishan Damani made a lot of money. And that's how he sort of made his fortune and grew his portfolio. Later, he translated towards value investing. His mentor back then, through which he sort of translated his portfolio into more of a value investing stocks. And in 1999, he ended up purchasing a franchisee of Apna Bazaar to start a hyperlocal or a supermarket concept in Nerul. And when he started that in Nerul, he did not like the business model of the company. He thought there were a few of the flaws in the business model, so he did not buy into the business model. So he quit the Apna Bazaar franchisee. In 2000, he took a major decision to quit the stock market full time and just to remain as an investor as a backseat. In 2002, he ended up starting DMart as his first outlet opened in Powai Hiranandani, Mumbai. And rest is history today, friends. We all know what DMart is today. So that is about the DMart story, and it's an eventful journey for Radhakishan Damani. He's plus 65 today and a very reputed stockbroker with more than $1 billion in his own portfolio of stock. Let's now discuss about the facts which make DMart special. DMart's success lies in three pillars, that is customers, vendors and employees. So let's understand what are these. The first being the customer. The DMart stores for their customers are located in the residential or close proximity of the residential area. So it becomes very convenient for customers to shop and transact at DMart stores. 90% of the stores of DMart are owned by DMart, which reduces their operational cost in terms of the rent and everything like that. So the operations become very efficient and competitive. They sometimes even compete with the local Kirana stores around us, thereby making things very affordable for us. And that benefit is what they pass on to customers in the form of product discounts. And that's how customers became happy and they keep on going to the DMart because they get to save more by shopping at DMart. The second one is their vendors. Typically for FMCG companies, the credit cycle of our vendors varies between 15 to 30 days and stuff like that. For DMart, they maintain a 7 to 8 days credit cycle to vendors. So they try to pay their vendors very fast, thereby getting a special discount from the vendors in the form of cash discounts, right? And when they buy from these vendors or directly from companies, they buy in huge quantities, right? Unlike us. So they get something called as volume discount as well from these companies and vendors. And that's the product discount they pass on to customers when customers buy from their stores. Typically, when we talk about the Kirana Mal journey, this is how it looks like. From company, there is a stockist, then there's a distributor, then there's a sub-distributor, then retailer, then customer. That's how it reaches to us. But DMart makes it happen by directly going to the company and directly to us, thereby improving better margins and maintaining a better life cycle to the entire product journey. And that's what their vendors make it special for us. Third, it's its employees. Typically, all the employees DMart gets are typically freshers. They spend their energy and time in terms of training them, and that's how they retain their employees more. Their employees, they give more freedom to make decisions in terms of the store operations and stuff like that, which increases the morale of the employees, makes them feel like an owner of the store, and that's how they try to retain their more employees. Now, DMart's moat is their ability that someone cannot copy them very easily, right? For let's say compare it with Big Bazaar and Reliance Smart stores, they are not owned by those guys, right? So DMart owns their own stores. So if a bigger company tries to own their stores, they're going to incur a huge capital expenditure because they already have a lot of stores. DMart started expansion very, very slow by owning the stores and then sort of gradually going on expanding their brand. That's why they own most of the stores today. So that's why it is not very easily replicable by another brand. Now, when you look at already a bigger brands who operate on a large credit cycle, such as 30 to 60 to 90 days, it is very difficult for them to reduce their cash flow down to 7 to 8 days, which is very special with DMart because from day one they maintain that cash flow. So they have, as an organization, they have got trained and they have fit into that mold of just paying in under a week to their vendors so that they get the discounts and they get the benefits as we talked about. So that's a very, very huge mode DMart has. DMart also has adopted a multi-modal approach to grow. They would open multiple size of stores, 3,000 to 7,000, 7,000 to 10,000, and 10,000 to 15,000 and above, such size as per the area. So they don't have to follow a standard parameter to incur more cost when there is no demand. So they understand that demand. Typically, they have also opened stores in tier 2 and tier 3 cities, whereas there is very less competition, right? And there's a loyal customer base which has to transact and which has to shop their kirana every month. So they have got that footprint also there by opening the stores in tier 2 and tier 3 cities. So friends, let's get to the financials of the DMart. So as you can see it on the screen, we are currently looking at the sales growth as how they are growing every year in the sales. If you can see that 24,000 crores is the sales growth they have done in 2019-20 year. Before that year, they have done 19,000, then 15, then 12, and then 8. If you look at the 1 year CAGR, that is almost 24%. That is very, very impressive. If you take a look at 3-year average, that is even more. And if you take a look at 5-year average, that is even more. So the share and the growth just becomes very, very special as we take a look at more years that way, right? Typically, there are a lot of tools out there in the market that you can use to refer to these numbers. There's Zerodha, there's many more. Currently, I'm using the Finology ticker tool that gives me this comprised view, and that is pretty good. Then you can take a look at on the screen is the shareholding pattern. That is where promoters hold about 75% of the shares. Then there's a public holding of about 8.2%. That's where we all fall. Then there's FII and then DII and then others. Promoters have maintained the share. They've had to reduce their stakes to 75. Furthermore, they are going to require to get it to 70 as per the SEBI norms. Currently, the company has shown the good profit growth of about 41% in last 3 years. Company has shown a great revenue growth as we all saw. The company has significantly decreased their debt by about 657 crores. That's very impressive. The company's limitations are that their PE is high and their EBITDA EV is also a little bit high. We'll come to that later. Then let's take a look at quarterly results. As we can see it on the screen, this is a comparison of last 6 quarters. As you can see, the quarters have been little shaky because of COVID, right? That's where the demand has reduced a bit. But if you compare, which is very, very important, December 2020 versus December 2019, you will see that there is a jump of about 10%. That is very, very impressive. That's about quarterly results. Then we'll compare to the profit and loss. As you can see that due to COVID again in the quarter of March, this is yearly profit and loss. As you can see, the sales are constantly growing year by year. As we saw that in less than 3 years, DMart has doubled their sales, and they have the potential to do that magic again at least 2 to 3 times. So that is something which is very interesting about DMart numbers. Then you can see that expenditure operating profit is again increasing. That has gone from 600 crores to 2,100 crores in just 5 years. Then there is an profit before tax. As you can see, that has gone 5x in 5 years. That means they're 100% profit growth every year. And that is very, very impressive because commodity market is very, very hard to take out profits in. This is not a technology business. So that's why it's very, very impressive because inherently the margin is very, very small in these commodities. Then let's take a look at balance sheet. As you can see, the share capital is increasing a little bit. Reserves is something which I want to point out your attention, users. Here you can see 5 years ago there were hardly 1,000 crores in reserves, and now they are to 10,000 crores in reserves. That make their war chest very, very strong in terms of fighting any of the battles like COVID or others. And it also gives them the cash to sort of expand as they own their stores, which is a real estate investment for them. Then you can see their assets are also growing. They've tripled their asset in the next 5 years, and that is about the balance sheet, which looks again very, very impressive. Then our most favorite is the cash flows. आफ्टर ऑल द एक्टिविटीज बिजनेस कैश कैसे जनरेट कर रहा है वो बहुत इंपॉर्टेंट है. और यहाँ पे हम देख सकते हैं स्क्रीन पे कि प्रॉफिट बिफोर टैक्स in 2016 was close to 500 crores, which has gone to around 1800 crores. So again, 4x growth in 5 years in the profit before tax. And then you can see the net cash flow is something which is negative because they have to buy the assets, and that's where they pay depreciation cost. And that's why the net cash flow is negative into the negative. But if you take a look at financing cash flow, that is where you can see that in 5 years it has gone from 200 crores to 3,383 crores. So again, a very impressive stat there. So this is about the DMart financials. Now let's take a look at the stock growth also. As you can see it on my screen, that in the stock growth, you can see that here the stock got listed somewhere around March 17, and from there on it has just kept growing as the demand has also grown. As you can see, the volume is something has also grown into as the time has passed. And then you can see that here I've drawn a resistance line which basically takes in account of 3 to 4 points, and that's where it sort of draws a line. That was the band of around 1500 to 1600 the share had gotten capped to. And then post which you can see that there is a jump. You can see that the stock has jumped from about 1800 to 1900 to 2000 level, and then it has post that also it has gone till pretty much 2200 and then 2600. So it has gone till high, and even there you can see even if it has fallen, it has produced a stability of 2200. So it has almost doubled in 5 years, which is a very impressive growth for the share. So the stock growth is also something which is very, very impressive for DMart, as you can see it on the screen. And then let's get to the peer comparison. For peer comparison, again, as I told you that I use Finology Ticker as a tool, which gives me the analysis in terms of how it sort of works. So by 2012-13, DMart had increased their revenues from 260 crores in 2006-7 to 3,334 crores. So again, in 5 years, they had all taken the sales to almost 15x by making them the India's third largest branded retail chain in their peers. The beauty here is that the Future Group with 1,000 stores was clocking around 14,200 crores. Reliance Retail was clocking 10,800 crores with 1,450 stores, and DMart was achieving that with just 65 stores, which is very, very impressive, which we weren't pan-India that time. Their sales per store was somewhere close to 53 crores, while Reliance was making around 7.45 crores per store. So almost 7 to 8 times efficiency per store is what DMart was showing. Today, DMart runs and operates about 214 stores all across country. And let's take a look at their peer comparison chart. As you all can see it on the screen, here I have around 6, 9, 12, 13 companies to say so. The first metric is the market cap, which Avenue Supermarkets, which DMart is the highest. Then there's a price to book factor that is about 16. Then there's a PE ratio, which is price to earnings ratio, that is about 180, which is quite high. But they have been doing it really well, and that's why their price is inflated today. But we'll talk about how it's still worth probably at today's value. Then when you take a look at EPS, which is one of the second best after Vaibhav Global, that is about 16 rupees. Then there's a return on equity, which is about 16.2. Again, second best post Vaibhav Global. P to S ratio is something which is market capitalization divided by annual sales. Definitely both the factors keep changing very, very rapidly day-to-day basis. But when you take a look closely, B by S is something, again, it's in a good range for DMart, considering the rest of the factors. And those are the impressive things as you compare it to trends. Then Bata India, Aditya Birla Fashion, Vaibhav Global, Future Retail especially has gone down really low in the market cap because of the current problems they are running to. Shoppers Stop again provides a good in terms of the numbers, but their EPS is sort of in negative, and their return on equity is also on negative. So they're not able to run a very efficient operation, as you can see there. Then you have Arvind, Spencer's, Future Enterprises, and Essor Real Infra Resource. So that's about the peer comparison. Again, as you can see that DMart is doing really well in terms of their peers. So a great footing in terms of their competitive advantage to maintain the same for the future. Let's come to the future and understand some of the factors there. So future, I've divided it into two main categories, one in the pros and another is the cons. Let's discuss and go through those. Pros is they have very competitive price beating kirana opex. जो किराना माल स्टोर का जो ऑपरेशनल कॉस्ट रहता है और जो डीमार्ट का कॉस्ट है, उसमें डीमार्ट ने काफी अच्छा कंपिटिटिव स्पेस रखा है. डीमार्ट उस वजह से बहुत अच्छे डिस्काउंट्स कस्टमर्स को ऑफर कर पाता है. Then comes in the private labeling. That's why DMart is now doing their own private labels. जैसे कि आप DMart में जाके देखते हो D Homes और बाकी सारे ब्रांड्स के वो खुद के they are making brooms, the tiffins and the cups and mugs. That's where they make more money. And they have kept this private labeling to the locals only, so they don't have to have a heavy cost of transportation when it comes to getting those things to their stores, which is now pan India. Then third is the owning asset, which I think is a secret sauce, and it's an undue and unfair advantage DMart has. By owning those assets, their ability to generate cash at a lowest, cheapest interest possible, which is a mortgage loan, goes up very heavily. And as they own the assets, their operating expense, which is the rent, which is the highest expense for other retail chains, that also goes down very, very significantly. That's why owning assets is another best thing. Then let's come to the cons. One con which I see is that as per SEBI norms, the owners, promoters holding should be less than 70%, which is today 75%. So they'll have to liquidate 5% as we saw in a phased manner. That is going to cause some demand into the market, which will not inflate the share price as it would otherwise. The second would be the thin margins. DMart, if you take a look at even though net margins are growing very well, if you take a look at net margins percentage, it is hardly 6 to 7%. That is very, very competitive. Means there is only room for 6 to 7% percentage errors, and that is very tricky. Such as things like COVID may affect their expansion, and they might take their cash away a bit. So that is one of the cons, but they have been managing that low margin portion very well and trying to increase it by multiple ways and means. Then one of the biggest worrying factor has been for all the investors and public is been the Reliance entry into this space. I mean, Reliance was there already doing it with the help of Reliance Stores way before even DMart entered the space. But with the help of JioMart, Reliance is trying to expand big time on this category by introducing online deliveries, again, better discounts than DMart, and that is something which is of a threat for DMart as they have to maintain their customer base over Jio's offerings. Then one of the worrying factor that has been little disappointing for me is DMart has not paid good enough attention to their online orders. They've had a very slow growth on the online orders they're doing. So that is one of the cons. However, my take is that DMart is still capturing very small pie of the total retail market of our country, which is more than $500 billion. And they are just at about $4 to $5 billion. So hardly scratching the surface in the total market. However, other players will survive in this space. I feel that DMart has a great competitive advantage to keep doing better than its peers, which makes their shares worth, because जब हम स्टॉक मार्केट पे शेयर खरीदने का सोचेंगे तो टिपिकली जियो के साथ कंपेयर करेंगे, फ्यूचर के साथ कंपेयर करेंगे या फिर शॉपर स्टॉप के साथ कंपेयर करेंगे, तो वहां पे डेफिनेटली डीमार्ट का शेयर बहुत अच्छा साबित होता है, एंड दैट्स व्हाई डीमार्ट शेयर has that advantage. I will try to recommend that every time you buy kirana from DMart, you buy their share as well. And that's how you should keep investing in DMart for next 1.5 years. And in next, again, 5 years, they have a potential to double down their share value and your investment. So you're not just buying kirana and saving costs, but also buying shares and increasing the money by not working hard. So that's it from the DMart fundamental analysis video. If you've watched the video till now, do like and share the video among your peers and your friends so that they can know about the company and about the investments there. And do subscribe to the channel and keep watching. Take care, friends. Bye-bye.